Hello and welcome to Investing Confidential. Well, I don't make as many videos as I used to. I'm kind of busy, but the last video I did make, as you can recall, we talked a little bit about the positioning, why there was a rally, and I had mentioned a few weeks ago that the positioning was very bearish, and no matter how bad economic situation was in the US and around, well, it didn't matter. Okay, it just didn't matter because everyone seemed to be bearish. Last week, we discussed the fact that the rally was predicted, as we said, because too many people bearish. So we've had this massive rally. Actually, we've had a rally since October. It's been unbelievable, but that things had changed. Okay, things had changed pretty dramatically in terms of positioning, but the economy was still crap, and obviously we've seen in the last week pretty dire market situation, right? Not just in the US, but it's been a tough week globally, right? A very, very tough week globally. And the bottom line is that it's not about, as we talked about, you guys know how bad the situation is here economically. I don't know how the numbers don't show we're in recession, but I'm going to go into that in a little second and tell you what really is going on. But overseas too, I mean, things are really bad. And it's just the problem is now with all of these derivative instruments, people can get bearish very quickly. In the past, it was not easy to get bearish very quickly. Now it is. So let's just jump into it. How is the positioning right now? Okay, so the positioning has changed. Okay, in a week. Okay, this is what I'm telling you. It's incredible. Okay, so let's look today right now at just one simple thing. This is Google searches. Okay. This goes back a number of years. As you can see here, people are searching for bull markets. Okay, just like in the beginning of right after the pandemic when the market started to move, people are searching for this term bull market. All right, that means people are expecting a bull market. So people got bullish really fast, and now we look at volumes on call options. Folks, this only goes back about 10 years, but we can go back probably 20 years, and this is an all-time high. This is out of control. People all of a sudden went from extremely bearish to extremely bullish. Next, we see open interest. Okay, IWMs, which is the Russell, is probably one of the most used options by professionals to hedge and other things to express their views. Not as much by the public, but as professionals love the IWM, which is the Russell. And look at the option, the call option open interest. I mean, again, it's almost a 10-year chart. Okay, people, and we saw 2 weeks ago how bearish people were, and today incredibly bullish. As of last week, incredibly bullish right now, still incredibly bullish. Now we look at equity, put and call volumes, okay? Obviously, you can see here call volume versus put volume. This is even more important than the absolute call volume number. It just dwarfs, okay? Absolutely dwarfs. So bottom line is people went from extremely bearish over a period of time, maybe a few months, to within a week, incredibly bullish, okay? Incredibly bullish. And so it's no surprise that we've had, since a week ago, we've had a rough market in the US and overseas. Okay, very rough market, with a few exceptions. Brazil being one of the, I'm actually in Brazil today, but it's one of the few places where you've had interesting rally, and I'm going to go into that in a second. But let's look at reality. Okay, forget about all the positioning for now, and it's still pretty bullish. So you know where the market's going, probably nowhere to down. But again, you need to look at the fundamentals. Look behind the volumes. Okay, here you see the earnings yield of the S&P 500, the forward earnings yield. The earnings yield basically is the inverse of the PE, minus the 10-year yield. Okay, these are extreme levels, folks. These are extreme levels. Okay, and they're not good levels. Trust me, they are not good levels. Okay, the last time we hit this was 2007, and we all know what happened after that. Okay, we are in for, from a standpoint of value, there is no value. There absolutely is no value in the stock market today. Nothing. Let me touch on recession. Okay, something that I have mentioned a number of times. Okay, you can see here, Wall Street Journal asking the same thing that everyone's asking. Where's the recession? Okay, where is it? People have been talking about it. I've been talking about it. I've been saying we've been in recession. And one of the reasons that I can say we was because it was where I live, okay, in the New York area. And the New York area is a disaster. The same with San Francisco, the same with Los Angeles, same with Chicago. So the reason that, and these were all the news media outlets, all right? So here's my theory now, is that just like in the 89, 90, when we had the S&L crisis, the southwest of the U.S., Texas, Arizona, were in deep recession, but the rest of the U.S. were okay. The U.S. is a huge country. It's massive and diverse, and there's a lot of free markets and a lot of regions do different. So you could have recession in one area, not in another, and this is what we're going to experience. It's just beginning. So if you live in New York, you live in Chicago, you live in San Francisco. San Francisco, by the way, is already in depression, and Los Angeles. You are going to live through a recession, and it will be very prolonged. It will eventually drag the rest of the country in. But the reason that you don't feel it, for example, in Florida, in North Carolina, in South Carolina, and in North Dakota, is because we don't have recessions there. People are mobile. People are moving there. You're actually doing okay. These other big cities, okay, you've got crime, you've got horrible situation with commercial real estate. I mean, you're in a recession. And this is where the media is. So this is why they're asking, where's the recession? So we are in a regional recession like we have been in the past. And it's going to take a long time for these large cities to actually come out of it. I want to mention a couple things about something nationally about the consumer, because I think I've talked a lot about we are in a consumer-driven economy. I mentioned that many, many times, okay? So let's look at the University of Michigan, okay, which I think is probably one of the more reliable surveys out there. And as you can see, well, the media is making a big thing of it going a little bit higher this week. Well, as you can see, it goes up, it goes down. The trend is still low, okay? And if you're a chartist, if you look at this chart right now, you're saying, okay, it hasn't broke the downtrend, so I'm not going to get excited about it. But, you're seeing the sentiment go higher. Why am I showing you this? Well, when you dive into the data, the reason that the University of Michigan consumer sentiment is because the stock prices. Okay, they factor a number of things when you talk about consumer, and one of them is stock prices. So the biggest increase in again, these are backward-looking things, but the biggest increase has been the movement in the stock market for this year. Okay, and it's having a bigger impact. Now, is that really consumer sentiment? You could make a case, yes. No, I don't think it is. So how many people in this country actually own a lot of stocks? Okay, directly stocks, right? Indirectly, a lot of people do, but directly, very little. So it tells you that even that data is being kind of manipulated. Okay, and then when you look at a longer term chart, okay, University of Michigan current financial situation, right? Not consumer, but overall versus 5 years ago, okay, versus long term. We're plummeting, folks. Financial conditions in this country are plummeting, and they're getting worse, and they're not going to get any better anytime soon. And this is something that, outside of the stock market and everything else, this is not good for anything. Okay, but again, going back to what I said before, positioning is bullish. So when positioning is so bullish, this stuff actually matters. Okay, it matters a lot. So overseas, let me just mention a couple of things about why things. So first we have UK. Okay, UK is, in a very, for us, it's our most important trading partner in Europe, and obviously one of the largest economies in the not in the European Union, but all of Europe. And UK is now experiencing very heavy inflation, and we're seeing this across Europe. We're seeing this in Sweden. We're seeing this in France. Inflation is roaring over in Europe, absolutely roaring. And that's going to have a continued impact. And I think that's what the Fed is seeing. I mean, we're in terms of globalism, I think, as I mentioned to you, globalism is dead as far as I'm concerned. But the reason it's dead is that there's no reason for it anymore. We're already a global economy. No reason to promote globalism. But when we look at things, then we look at Japan. Okay, we see the same kind of. Okay, Japan. They've had again the hottest CPI reading they've had in 10 years, maybe longer. Okay, and then the expectation for inflation is going significantly higher. Okay, looking back again, these are expectations, and you can't get around it. So the bottom line is, if you have to Japan is very important because, as we spoke about before, the institutions there are one of the most right now the most important buyers of our bonds. Okay, so with inflation going up over there, we're having problems here in the bond market. They're pulling their money out. Okay, and that has big implications, very, very big implications. One of the biggest implications is something I mentioned to you that, again, just starting to, I think most of you for the first time heard this being mentioned recently by anybody, and it's called financial repression. And now, okay, here's a broker report talking about it as well. And I'll go through what is, again, this is something you really need to know about. Okay, the very, very important. Financial repression. Basically, a government needs to finance itself through debt, more and more debt, as the U.S. U.S. is just a debtor nation, okay? It's no longer, it is a debtor nation. And now that we've passed this so-called debt ceiling limit, as I told you, people were worried about all these bonds coming to the market. And, well, the bottom line is, when you have financial repression, you have to worry because the government forces your domestic institutions, as you can see here, okay, to buy up. Now, what this is showing you basically is that the foreigners have no interest in our debt. Okay, they have no interest because in their mind the yield is too low and there's too much credit risk. Now, imagine saying that about the U.S. It's just shocking. You should be shocked. So who's buying up all this debt that the Treasury is selling? It's you. It's you. Okay? It's the banks. It's you. It's domestic. It's insurance companies. They're being forced to buy it. Okay? A wink and a nod by the Fed, by the government. And they're buying it. And you're buying it. And you shouldn't be buying it. But you have no choice. Okay? Absolutely have no choice. So things are getting bad. Okay, the housing situation. I'm going to finally end on the housing situation because, as you can see, I mean, look, there's no matter how many people say, "Oh, the situation's over, housing's better," we have people buying all this other stuff. I mean, here you have housing starts are surging. Okay, look at that. Woo, housing starts are surging. What does that mean? That means nothing. That means more supply, folks. Think about it. Housing starts are not a reason to get excited. They're a reason that probably housing are going lower. Okay, these home builders, they have all this land. They got to build houses. They got to get rid of all. They have this financing. They're probably being pressured by the banks to use the credit or lose it. So they're going to build more houses. They're going to lose their shirts, but they're going to build more houses. And as you can see here, bottom line is the mortgage rates are still very high. And this is obvious headline, but the home price is suffering, and they will continue to suffer. Okay, and the last thing, I want to talk a little bit about the Fed. Okay, the Fed obviously surprised a lot of people being as hawkish as they are. And people saying, what is the Fed seeing? What is the Fed seeing? Well, the Fed's seeing this. Okay, folks, look, I'm just going to give you a couple charts. I'm not going to get, first of all, before I show you the charts, wages are going higher, significantly higher. No one's talking about it. But here's two charts. Grains, okay? Why are grains? Grains in everything. Grain is a feedstock. Grain is in every single thing that you buy in the supermarket, all the processed foods, which are not great for you. And the grains have been declining for almost 2 years, and they've just broken up, okay, higher. And what does that mean? That means food inflation, I will predict, will be going much higher. Now, the Fed sees this. Okay, other thing, look at coffee. Everybody drinks coffee. Look at this chart. This goes back to, we're breaking prices of '08 on coffee. Okay, Starbucks, all these places. Everybody drinks coffee. That's inflation, folks. And the Fed is looking at this, and they know that things are bad. And they know that they didn't want to pause. They had to pause. Again, we talked about it. They were forced to pause by the financial markets, creating fake debt ceiling and fake banking crisis. And they were fake. In the end, it was one bank that had a problem because of bad management, terrible management, by the way. But there was no other reason for these other banks. And obviously, we've seen now there was no banking crisis. But finally, I'll leave you with the yield curve. A few months ago, people saying, the yield curve doesn't matter and whatever. But the yield curve does matter, folks. And we are in a recession. If you're in New York, San Francisco, Los Angeles, Chicago, you know it. The rest of the country is not feeling it yet, but they will. They will. And that's it. So the rest of the world having big problems. There are some places like Brazil that are doing better, actually Turkey also. I'm going to try to get into that if I can this week. But again, I'll leave you with the yield curve. And for investors, be careful out there.